Hi, everybody. We're almost done for the day, don't worry. This backdrop never gets old. My name is Emmanuel Adu. I am the chairman of the advisory board of Onera. I'm also on the board of a company called Ionic, and I'm also a senior advisor at Perla Weinberg Partners. So if anyone's got any more jobs to throw my way, I'll do them. I'm joined by a really cool panel. I'll let them introduce themselves and a really interesting topic focusing on private markets. I'll start to my right. Graham, why don't you start? Just tell us a little about yourself and Archex.
Thanks, Manuel. Thanks for having us here. Thanks, Tabella. There we go. I'm Graham, the CEO, co-founder of Archex. We set up in 2018 and kind of had a vision that every asset was going to move on chain. So we went to the FCA and became the UK's first regulated digital securities exchange, custodian and broker, and registered crypto company. So we spent the last 5 years building our infrastructure, backed with the likes of Aberdeen Asset Management, and we've been tokenizing funds and various other securities.
Dimitri?
Guess we just pass this along. Yeah, hi guys, I'm Dimitri. I am an investor at a fund called Coin Fund. We sort of span the gamut of investing on the venture capital side of things, investing in tokens, so in the liquid markets. We also have, I guess, a data and sort of benchmark business. And yeah, kind of looking at the entire digital asset space from kind of early stage to kind of Series A companies, and then guys that have issued tokens as well. And particularly excited about, in crypto, there's a lot of different things, but an area that I spend a lot of my time on is kind of the institutionalization of the asset class. So, yeah.
Fantastic. Chuan?
Let's see if this works. Okay. Hi guys, I'm Chuan Si from UBS on the investment bank side. I look after APAC private equity, so I broker transactions in late-stage pre-IPO companies, the likes of your ByteDance, your SpaceX, your OpenAIs, and the likes. Very much looking forward to a great conversation.
Awesome. And Anthony?
Everybody's wondering who I am. No, sorry. So I previously did the introduction, my introduction for Head of Business Development at Onera, but Emmanuel talked about the various jobs that he does. I do one other job as well, which is that I'm the co-chair of something called the GDF Tokenization Forum. And as Onera, we wanted to bring the industry together to unlock distribution, but we wanted to do that in an open way. So we actually brought together an industry forum under GDF as a not-for-profit global digital finance to make, I talked about these routers earlier, these peer-to-peer routers, the protocol that talks open. So anybody can build these routers to talk in this open peer-to-peer way. So I thought for my introduction I would mention that. It's a forum where we've brought together over 80 of the world's institutions, digital leaders, fintechs, etc. So if you're interested in knowing more about that GDF tokenization forum, come and talk to me about that separately, and we'd welcome your participation.
Awesome. Actually, stay with you, Anthony. I want you to start us off. So, we use the word blockchain, we use the word DLT, we use the word digital assets, we use the word interoperability, and a whole bunch of other things as well. And I think it's really important that we just align as a group as what the hell we're all talking about. So, what is the role of blockchain technology as you describe it, and how is it going to, how's it best utilized within the realm of private markets, which is what we're here to talk about today?
You're directing that to me first?
I am, yeah.
They hear so much from me. So on the blockchain is really relevant on the asset side, right? You want to be able to tokenize an asset on either a blockchain or a distributed ledger technology, and that holds your record of ownership of that asset. And in the world we're in, it's invariably a regulated security. So that's your blockchain DLT. Interoperability, you could talk about interoperability at a technical level. You can say, oh, can we make different blockchains talk and move these token things around? But that's really a technical problem, and actually maybe doesn't make so much sense with regulated securities. So often interoperability in the language we talk is then about how do you unlock interoperability at a business level between financial institutions. And that opens up distribution. And then that enables a lot of these other things. Answer part of the question. I might let some of the other panelists answer other parts of it.
We're gonna pass it to Graham. He's gonna finish it off for us, and he's gonna also answer the question on, it's how, I guess. I'm asking the how question to you, not the what question is. How can institutions strategically use tokenization in digital asset private markets to enhance liquidity and accessibility?
Yeah, it's quite complicated. I know a lot of people talk about private markets as this huge market, but the reality is bringing liquidity, transferability, and trading is pretty difficult. So we set up back in 2018. We actually registered with the FCA as an SME growth market. So one of our visions actually was how do you open up capital markets to smaller companies a bit more easily? And one of the things that we can do, for example, is we don't have to follow the listing rules in the UK. So we have a special set of rules to get companies onto our venue. And then the idea really was, if everything's on a blockchain, it becomes more transferable and potentially opens up a lot of the benefits of digital assets that just don't exist on traditional investments. The reality is it's a bit of a challenge at the moment for a bunch of reasons I'm sure we're going to get into to feel the full benefit of the blockchain. But from an institutional point of view, I think it opens up a lot of different options. So if I think about, I used to work at HSBC, they're a large private bank. They obviously have a lot of investments for all of their clients, often held through nominees companies. How do they track ownership? How do they monitor what they're doing? They could do it all on a blockchain. They could transfer between clients internally in a much more efficient way, trace ownership. They can also do things like, if you think about a private equity fund, quite often will make investments, quite often successful investments, but they have to sit and wait for an exit before they can, materialize their carry. If there were some way of transferring out of it in a more efficient way, if there were some form of liquidity, then potentially they can realize their returns sooner, improve their IRR, maybe launch funds more quickly. So there's a lot of opportunity out there, but it's going to be interesting seeing how everyone exploits over the next few years.
Same question, actually. I'm going to add that to Dimitri's list, because you're an investor in this space, right? You look across the entire field. Your intro, you talked about some tokens and maybe less regulated assets that you look at, but you also look at, I'm sure, infrastructure and other pieces. What's got you, when you look at the landscape, how do you think about it? How do you choose where to focus? And for our audience, how should they be thinking about private markets, alts, etc.?
So it's kind of like a multifaceted question, but I'll try my best to address it. So I'll start with the premise of what I think this industry has actually done wrong, because I think that's probably the most important thing. Is we as an industry, or I say we, what I mean is kind of blockchain as a whole has probably spent the bulk of the last 10 years basically telling people, buy this and it's going to go up, right? Do this and you will make money. And I think that actually the reality is that most of the value that we see in the real world, for a lot of cases, comes from do this and you'll save time, you'll improve efficiency, whether that's capital efficiency or something else, you'll have better transparency, you'll reduce costs. And I think the big picture that I'm seeing is that, at least when we talk about things like tokenization, when we talk about, I guess, a lot of the topics and themes covered in this conference today, these are things that aren't as sexy as buy this coin, a dog with a hat and it's going to go up a lot. Instead, it's things that are actually helping the sustainability of existing business models and then actually improving them. So that's kind of point number one. Now, I think, you mentioned this earlier in terms of like the benefits that we can get from a lot of this stuff. And I think, areas that I'm excited about, at least personally, when I look at sort of the existing, asset, you talk about distribution actually, how does it work typically? Well, we have a lot of private assets out there. If we want to buy them, we have to first declare that we are professional investors. So there's some sort of verification required around, do you have the criteria and credentials to get involved? Secondly, you then have to transfer your money. There's transfer agents, there's there's kind of 5 or 6 layers of manual, complicated work. And that's before you even get to things like, AML, KYC, where, again, humans are involved. And I think in a world where we have ever more assets, ever more things being, more and more complicated, if we can reduce, the risk of human interaction getting this wrong. So how many banks out there have been fined for money laundering, issues or not following KYC, AML properly? How many, funds have had issues because, the fund administrator hasn't done stuff in the right time? And so I think a lot of these they're not sexy, but they're very, very good things for the long-term sustainability of just asset management as an industry. So I think I've probably been rambling on a little bit, but I'll let someone else jump in.
I saw Chuan smiling at how many banks have been fined. Don't worry, I spent 26 years at Credit Suisse, so our fines exceeded you guys across the street in Prada.
We are still paying for that right now.
Yeah,
After the merger, we are paying for some
yeah,
of
we
those
exceeded
fines.
yours. Don't worry. You've inherited them. Congratulations. So actually, just switching to you, actually, just let's kind of go into that, which would be, thinking about, you're a private equity guy, right? So, you're dealing with helping folks raise money. You're finding, and you're on the other side, it's institutional clients, and then, they're effectively in a cap table on probably the lawyer's spreadsheet or maybe if they're fortunate in some system like Carter or something along those lines. How do you see this evolution of the technology helping, whether it's your client on the fundraise side or it's your client on the institutional investment side?
Sure, and I would take it with two caveats. One, I focus on venture, so private markets as a whole is huge. There's real estate, natural infrastructures, and so forth. I can only focus on venture capital. And the second is that I'll approach it more from an institutional standpoint, given that they interact very, very differently vis-a-vis high net worth clients. I think for us, where we see the potential for blockchain is that in private equity, there is zero infrastructure. If we talk about trading systems, post-trade clearing and settlement, it doesn't exist at all in private equity. And because of that, if you kind of look at blockchain as a lead technology, there is the potential for us to do a lot of things. When it goes to things like pre-trade, for example, how do we check for share provenance? Could you actually trigger that on the blockchain? If you talk about the natural characteristics of a blockchain, for example, a cap table registry, you mentioned about CADA, for example, is that something that blockchain can actually play a role around? Things like a smart contract escrow wallet, could you use that as a quasi-clearing facility, given the lack of a clearing facility in private equity right now? Even simple things like digitalizing the shares itself in the very first place, that unlocks a lot of different use cases like collateral, like lending against these securities. So I think this is where you can see that when you put in a blockchain element over there, there is the potential. So you can see very clearly the value add. What gets us even more excited is that from a migration standpoint, there isn't a need to migrate anything. It doesn't exist. A lot of pain points like, how do you migrate public equities onto the blockchain? It's tough, right? Everybody already trades on DTCC, Euroclear, Clearstream. How do you migrate all these guys there? It's tough, but on the blockchain side, there isn't anything to talk about in the first place. There could be one question, around, do we need a blockchain infrastructure or just digitalizing it? That's a different question altogether, but it's not the worst idea, when you're trying to build from ground up. Why don't you consider using a blockchain infrastructure?
Anthony, do you want to jump in?
Yeah, and I'll say this has always been the big prize, what we're talking about here, right? So the, as I call it, the whiz-bang world of crypto, which is loads of fun, right? But it fluctuates between maybe $1 and $2 trillion total market cap across the whole world of crypto. It's not very diversified because a lot of it's Bitcoin, right? But I'm looking out of the window, and as we were saying earlier, I'm looking at $3 trillion of real estate just across the water there, right? So the big prize, and this is what people forget and then they come back to, is, and to the various points, is you can take a world that's offline, like the private markets, take it online, digitize it, provide access to it, and then you're talking about potentially tens of trillions of dollars. You can streamline, you can digitize a non-digital world, create these new digital worlds, and then if you go to markets such as the public capital markets, I think Emmanuel and I have both spent our life creating the spaghetti that's in public capital markets that's now impossible to untangle. To your point, start somewhere where it's non-digital, but when you've got these digital rails, maybe then you can move also these public securities onto it. But the big prize has always been this one. It's, can we use this technology to digitize, streamline, remove friction around the largest market on the planet, which is private markets?
I actually think it's just, I'm just going to echo the words. I think I was the head of digital asset markets at Credit Suisse for about 8 years before leaving in 2021. And I used to joke that my day job was like moving a very heavy rock up an incredibly steep hill. And a winning day was when your colleagues didn't roll, when the rock didn't roll over and kill you. And to your point, Juan, it's like what you realize is that heavy rock, that lifting, was all about public markets. When you try to move public markets, you get really big pushback from whether it's regulators, whether it's your own compliance people, whether it's people within your organization entrenched in kind of keeping things the same. You don't have the same friction when it comes to private markets. And private markets, by definition, just to kind of level this off, is a definition of what makes the blockchain really important, because no one individual institution actually has more than 4% market share. So it's decentralized by nature. It literally, I mean, there is no central CSD, there is no central key architect. Is the regulator still in here? The regulators don't care because there's not, there isn't a proliferation of private individuals, retail. It's all institutional. It's actually the best use case out there for this technology. And I'm going to bring this to Graham next because, you know, when we, I think Angie said this in the panel she was on, talking about leapfrogging. This was to do with some of the stuff going on in more emerging nations. And so there's a really interesting opportunity to leapfrog public market infrastructure in support of private markets. And part of that leapfrog, I think, in that innovation is around DeFi. And so I wanted to just, Graham and I were talking earlier on about some of the things that Archax is doing around DeFi, which I think is one of those kind of, it's that leapfrog moment in terms of how the technology can be utilized and re-architected. Do you want to share some of your thoughts?
Yeah, I guess kind of the background is really that private markets is being talked about everywhere, not just in digital, but traditional as well. So only yesterday, the UK just started talking more about this thing called an intermittent trading venue, which is supposed to be a place where private securities can go and trade. And obviously, they're thinking about building this market while there's this kind of huge digital background emerging. So there's much more chance that the future technology is going to be built in that way. We still have, just want to talk about a couple of the points earlier before I jump into the DeFi. So part of the issue with private markets is it's everything. So from the smallest company to companies worth billions, and they come with a ton of different issues. So if you're a very small company, the last thing you want really is for your shares to be actively trading on a secondary market where they might be trading at a huge discount and you're going out to raise a round later. Or if you're a company making a lot of money, you might not want your competitors to get involved in the company. There's all sorts of reasons that private companies restrict transfers of the shares, so it can't always be possible. And then there's kind of huge information asymmetry that exists as well, which is a real struggle to overcome. So in the 5 years that we've been looking for SMEs to have trade on our secondary market, actually, we found none, pretty much. Most of the things that are becoming digital are things that are more traded actively already. And when we look at companies like Seedrs and Crowdcube in the UK that are very good for raising money for these private companies, the secondary markets tend to be bulletin-based, and it tends to be a place where people go to sell their shares after the initial excitement has kind of, come off, and then they're looking for somewhere to dump it. So there's a lot that needs to be unpacked in all that. But to your question on DeFi, like DeFi is the future. There is no doubt in my mind. Everything we're building around securities, we're building on a permission basis with a view that it can be used in all the DeFi apps. So whether it be like a permissioned Uniswap Aave or any of these platforms, there's a good market for them to trade. And Uniswap to me is less of a central limit order book like a traditional exchange. It's more somewhere where actually you can see someone putting a liquidity pool together of existing shares that people go and trade on a less frequent basis. So I think that's really exciting. If you look on something like an Aave side, a borrow lending platform, I mean, really, it's a ways away from being a securities lending market, but you can go there with your crypto. The rates are set for you by the community effectively, and you can borrow against it. So if you're sitting there as an Uber employee with your shares worth a fortune and you can't do anything with it, if you could go there and stake them and someone will lend you against them, but you're not really giving up legal title, that's potentially a good future use case for them. So I think the point's relevant, but I still think there's a lot of background work that needs to be done to make all of these things tradable.
Fantastic answer, thank you. Hey, we've got a few minutes. I'm going to ask 2 more questions, but if you guys have got questions and you want to ask them and you're burning and you don't want to wait for these guys to exit stage left and take questions outside, and I'll take a couple of questions. So I have a question for everybody and my whole audience, which is, just talking about, this is a big general question. It's like thinking about, blockchain, DLT, what other technologies are out there, other technology advancements that you see are going to really drive the kind of the hockey stick, if you were, in the private market space? What else would we be paying attention to? Why don't you start, Dimitri?
So other technologies that are emerging. I guess maybe I'll invert the question by just starting with like what I think is still missing. And so, if the basic premise is we're trying to take a very large, illiquid, opaque asset class and bring it, have better distribution, better information, I think in certain pockets of crypto, I think areas that are of particular interest to me is stuff that allows you to either have real-time information, so better disclosure as to what are the underlying assets. So again, maybe that's at the asset level, and you can have real-time information streamed on chain. So you can see, yes, I'm investing in a private credit vehicle or whatever, but I know the underlying asset is actually, generating cash flows from X, and I can track that in real time. Or it can be things like, people adapting or using zero-knowledge proofs to basically verify the identity component. And part of it is, I think I mentioned this earlier, where in the traditional world, you have to be an accredited investor. So how do you prove to someone without having to literally open up your bank account and send them all your personal information and say, here I am, here's my latest payslip? But equally, some interesting areas that I've seen work on, I think it was Wisdom Tree. If anyone from Wisdom Tree is here, please correct me. But I've seen some things happen where I think that there was a pilot project where they basically had not only done the first part, which is let's take an illiquid asset and bring it on chain, so we'll tokenize the fund, but then you talked about sort of advances in smart contracts. Essentially, why do we care about this stuff? Well, we bring it, we have a collateral, we can do something with that collateral. And here it's using smart contracts to automatically create securities lending for it. And then using the information from that, verify who is the right person or where is the right place to send the sort of accrued interest from. So again, it sounds kind of simplistic, perhaps not very exciting, but I think the long-term unlocks are very substantial if it takes off.
I'm going to ask the same question to, I'm going to go to, Anthony, you go next, and then I'll come back to Chan.
Yeah, I was just going to pick up the data point, right? Because when you're dealing with liquid assets and you want to understand that asset, fundamentally you need the right data about that asset. If you're talking about the biggest market within private markets, it's real estate. So if you want direct exposure to a piece of real estate, you want to know what are the rental incomes, have the lifts been serviced? There are all sorts of data that comes around that asset. And to the technology point, a lot of what we're seeing with digitization is leveraging a number of different technologies in different ways. When you get into large amounts of data about a multitude of diverse illiquid assets, you're very quickly getting into the world of AI, right? So that you're then going to see AI tools being used through these infrastructures to be able to give you added insights around particular type of real estate. I want real estate in Kowloon or whatever it is that enables investors to make more informed decisions.
Cool. Chan?
So I think if we look at the front to back, right, of a private equity transaction, I think we ran experiments ranging from proof of concepts all the way down to production testing across the whole value chain. I think we saw a lot of value adds, especially with regards to pre and post trade. Pre-trade things like testing your share provenance, doing your due diligence on the cap table shares. On trading and execution, to be honest, I think liquidity we didn't really see too much value adds there. Technically it works, but practically it doesn't. Post-trade, we think that there's significant value add over there, given the lack of a clearing system, but there's a lot of practical challenges. On the pre-trade part, which is extremely exciting for us, I think one of the problems, and given that we are all in Hong Kong, you guys might see this situation, right, whereby somebody comes to you and say, I have a seller in ByteDance or OpenAI for $50. Would you be able to find me a buyer? And once you locate the buyer, subsequently you go back to the seller and you realize, oh, the seller actually doesn't have his shares. He's in touch with somebody else. So it's 3 layers removed from the end seller who actually doesn't want to sell his shares. Now, this is a very common problem that we always see on private equity. The rules of engagement is very different vis-a-vis your public markets. So what we did was, in Singapore, we worked with a fintech provider who was actually able to take the entire share registry, put it onto the blockchain. And because of that, we were able to reduce drastically the amount of due diligence that had to be done just to prove the share provenance over there. So I think on the pre-trade side, we are extremely bullish about that. That's ready in production, and that's great. I think when it comes to trading and liquidity, I think anybody that's done brokerage in private equity knows that you just put it onto a different medium, it doesn't increase the liquidity. Maybe for wealth it does. We've got a very different hypothesis over there on the Insti side, but it's a little bit tough for us. Post-trade clearing and settlement, we think absolutely fantastic, but problems arise with regards to the practicalities of how do you actually fit an existing share into a different system in the first place. Some regulatory issues that can be settled, but practically it's a little bit tough.
Fantastic. So I'm going to open up this to questions. If anyone has any burning ones, I'll just keep going. Nope. Okay. So I'm going to keep going. As we think about, like, as you guys think about private markets, private debt, whatever the, subsection of private markets that you think about, there's obviously different levels of commercial application, commercial benefit, shall I say, that are available. And so I just wanted to get into a little bit, if we could, into, as you've been looking at the different subsections, whether it's alts, whether it's real estate, whether it's private equity, private funds, etc. Where do you see the kind of the biggest bang for the buck in terms of the benefits commercially?
I'm not really going to answer the benefits commercially, but I can tell you that one of the things that we found challenging is that these things just trade less frequently. So if you're running a crypto venue, maybe you can charge 10, 20 basis points per trade in the hope of getting billions a day. If you're running a traditional market, fractions of a basis point. If you're trading something that's going to change hands once a quarter, pricing it's pretty tricky. So if you've got a big lot of 50 million moving hands, then you're probably okay. If you're just talking about somewhere that someone can trade $10,000 worth of shares, every couple of months, then it's a real challenge. And in the UK, actually, I was going to say earlier, actually, the definition of private is a struggle. In the UK, actually, it's not well defined at all. Public companies are companies that really have followed the listing rules and are listed on an RIE. We're an MTF and an SME growth market. So private companies can trade on us, but they're still technically private companies. But in order to trade on our venue, they still need to be registered at a CSD like Euroclear, and going through that whole process of getting yourself into Euroclear is costly for us, it's costly for the issuer. So then you need to make sure that you make money out of it. So, we try and wrap it in with other services. So, for example, helping them raise money would be one way that you can do it. Most of the bulletin board platforms that deal with private markets end up charging more like 1-2% per side rather than 10, 20 basis points. So I think the pricing structure is completely different. There are a number of platforms in the UK that match these types of assets, like Asset Match springs to mind. Obviously, AIM in the UK is more of a market. They struggle to make a lot of money. So I think we need to start rethinking how commercially it makes sense for people.
Very cool. Anyone else?
Just thinking, you said something earlier, Emmanuel, about private markets. No single player is going to have more than 4%. Well, they're probably not going to have more than 1%. And you've got all of these some opaque environments that have merged around secondary and private equity, etc. Really, part of this is being able to again open this up at a global level, so that your investor who wants to get out of something is going to find an investor who wants to buy it. And the chance of that investor being on the same venue might be quite low. But if you can start to connect pools of liquidity peer-to-peer, I think that's the key to unlocking the private markets. It's not going to exist like the public markets with an IC or an LSEG or whatever sitting in the middle of a jurisdiction. It's going to happen because you're connecting pools of liquidity on a global level.
I think for us, pre and post-trade, selfishly because we are brokers and we know where liquidity is, and we have very, huge fixation on how liquidity can be improved, but not really so much from technology standpoint. But pre and post is very important for us. If pre-trade cannot be done, we have nothing to trade. If post-trade can't be done, we can't be paid. We are only paid when a trade itself has been settled. We've managed to solve pre-trade for Singapore jurisdiction, but APEC itself is China, India. We haven't been able to solve that. Post-trade systems, there's really only one clearing system in the whole world. That can be done for privates, and it sits out of the US. There is nothing in APEC, so I think that's where we find the commercial applications are at.
We've achieved something here that is, I didn't think we'd achieve. One, I didn't do much talking, which is pretty brilliant. Anyone who knows me knows I talk a lot. And the second thing is I've got really excited about private markets listening to you guys talking. I want to thank you for being on the panel, and we're going to adjourn and go to the next panel. Thank you.
Thank you.
Thanks, man.